Hello and welcome to Markets Today. I'm Lata Venkatesh and joining me from the Delhi News Centre is Surabhi Upadhyay. It was a day when the markets kind of kept the bulls reined in for a better part of the pre-noon trades, but thereafter, probably because of some smaller than expected or lesser than expected bids from JSPL for the latest round of coal blocks on auction, the markets took heart and you saw the power and capital goods just taking away at least the Sensex and the Nifty to some tall highs. Nevertheless, we did have to end with the declining stocks kind of outstripping the advancing stocks by a little bit. Hi, Surabhi.
Hi Lata, interesting day and very specific when it came to individual stocks that were moving, whether on coal auctions or any other news point for that matter. Let's quickly run through the headlines. Volatile day of trade on Dalal Street. Markets gain ground in late trade with the Nifty ending up around 0.3%, just below the 8,900 mark. The Sensex also ends 130 points higher. Metal, capital goods and power stocks see buying momentum. Mid-caps, however, underperformed blue chips today.
JSPL surges 22% after winning the Gare Palma 4-2 and 4-3 coal blocks. The management says they can use coal from these blocks for several of their power plants. Meanwhile, Coal Secretary Anil Swarup tells CNBC TV 18 that bid prices are likely to come down over the next few days as more mines are put on the block.
It's been a day of DVR action. Tata Motors, Future Retail and Jain Irrigation DVR surged between 3 and 7% as S&P BSE indices released rules to include DVRs in key indices. DVRs may make their way into the Sensex, the BSE 100, 200 and 500 indices when these indices are rebalanced in June.
Of course, DVRs being shares with differential voting rights. And small cap stocks like Astra Micro, Zen Technologies and Axiscades spike between 4 and 12% on continued buzz from Aero India, the Aero show. Bharat Forge, meanwhile, gained as the Kalyani Group announced a joint venture with Rafale Advanced Defense Systems for manufacturing high-end technology defense systems. Well, those are some of the headlines from the markets today, and here are the experts that we have lined up for you on the show. Market perspective from Vibhav Kapoor and Nirmal Jain. Ewan Cameron Watt of BlackRock will talk about the global picture and what the world expects from India. Coal Secretary Anil Swarup will also join to talk about the ongoing coal block auctions. We'll also get you the managements of some of the companies that were in the news today.
All right, so that opinion coming your way in just a bit. But first, let's look at the day gone by. And it's been quite a choppy session of trade. In fact, it was a day of dramatic twists and turns on Dalal Street. Markets rose at open, fell midday, only to then stage a pretty dramatic comeback in the last few minutes, rather the last 1.5 hours of trade. Sonia Shenoy is now joining in with a wrap of the day's trading highlights. Roller coaster ride today, Sonia.
Well, thanks for that. Today was a volatile day of trade. However, we did see a dramatic recovery in late trade, and the index, the Nifty that is, recovered 100 points from the lows to close around that 8,900 level. Now today, the key characteristic was that banks underperformed while technology stocks rose. So we are seeing defensives back in action. The volumes were high today, so the cash market volumes were more than 20,000 crores. In terms of gaining stocks, metals was the big pocket that gained. JSPL was your star performer after winning back its Gare Palma coal block. Apart from that, Sesa Sterlite, Hindalco and Tata Steel also gained in trade today. Technology stocks made a comeback as I mentioned. So TCS, Infosys, HCL Tech were all higher. Apart from that, heavyweights like L&T, HDFC and Bharti also made their presence felt. While on the losing end, it's interesting that this market is moving higher despite no participation from banks. So Bank of Baroda, PNB, SBI all closed in the red. While in the mid-cap end, you had some gainers from the likes of Adani Power, Tata Motors DVR, RCF, Gujarat and RE Coke, etc. that closed well in the green. Back to you.
Thanks a lot for that, Sonia. Well, there was certainly one theme in the big caps space, the power stocks. After JSPL made a dramatic recovery of about 20%, after news came out that it had secured some coal blocks for a reasonable premium of just 108 rupees per ton. The bonhomie spread to most of the power stocks, and we saw Adani Power, Reliance Power, Tata Power, all these stocks rising for entirely unrelated reasons. None of these are bidders in the coal blocks, but the cheer spread across power stocks and capital goods stocks. And then, as Sonia said, there was the defense kind of stocks, the Accesscades kinds of stocks that were doing very well in the small cap space. And separately, there were a bunch of PSUs, like MMTC, like Dredging Corporation. There were expectations that something may come on divestment, but these are not necessarily the biggest of candidates. And yet you saw, as you can see, 7% gains in some of these stocks. And then, of course, separately, the fertilizer stocks also were well cheered on expectations of some announcements from the government with respect to the price of gas.
All right, let's move on to the market perspective. And this is a bit of a cautious voice coming in. Vibhav Kapoor of Ireland FS does not expect returns of over 10% from equity markets in the next 12 months. He says that a 5 to 7% up move in markets will make case for asset reallocation.
I think one can certainly say two things. One, that on a 12-month basis from here, the returns are not likely to be great. You may get 10-12% returns, but you're not going to get great returns, because when valuations are 17-18 times, you normally don't get great returns. But over a 2-year horizon, maybe things, returns can still be pretty good, but then you are hoping that everything will go well in the next 2 years. I think if the market were going to go up another 5%, 7% from here, it would make a case for at least shifting some money into fixed income. Yeah. If you look at the cement sector, all the big guys are trading at 25 to 35 times FY16 earnings. Now that is something which for a cement sector which is cyclical in nature, is certainly expensive. Then there are FMCG companies trading at 40, 50, 55, 60 times. And generally the market is, I guess, now trading at about 18 times FY16. Part because the market has gone up, but more because the earnings have not come through and there's been a downgrade. So that's something one needs to be careful about.
Reality check, but markets don't listen to reality checks perhaps before an event like the budget. So let's get all the action from the futures and options space today. Nigel D'Souza is waiting by.
Well, just looking at the derivatives data, and in particular the options data, it appears the Nifty has made a bit of a base at around that 8,700 to around 8,750 odd mark, because the 8,800 put, that was getting written in today's trading session. The premium crashed from around 48 bucks to 30 rupees, so the stop loss there comes in at around that 8,770 odd mark. While we did see the 8,900 put as well, that was fairly active over there. The premium fell from 85 bucks to 61 rupees, so the stop loss for those traders comes in at around that 8,840 approximately. 8,600 put, that's been written over the past few days. Today was no different. The premium over there nearly half to around 6 bucks, and the 8,900 call, in fact, we're seeing mix of activity over there, because the premium over there moved from around 80 rupees to 90 rupees, but intraday the premium fell to around 44 rupees, and those buyers of those of that particular call, that's the 8,900 call, they more than doubled their money by the time we wound up, because the premium wound up at around 90 rupees approximately. Now take a look at individual stocks that were moving around. TCS saw a big short covering bounce in trade today. The open interest was lower, the stock went higher. We did see Hindustan Zinc see big buying. The open interest so there swelled up by nearly around 5%, while Idea came in for some selling pressure in today's trade itself. A couple of short covering boys included the likes of SAIL as well as Voltas. Both of them did see a bit of a short covering bounce, and Bosch, a rather large counter, otherwise not very active, that stock was getting sold into. The open interest so there swelled up close to around 30%.
Nigel, before we let you go, we have to talk about what was going on with JSPL. Day 6 of auctions, and Jindal Steel and Power hitting the headlines there. A 22% surge on that stock. And of course, this after it became clear that the company has 1-2 blocks, Gare Palma 2 and 3. Take us through what's really working well for the company. It seems like the company has pulled off a coup here.
Well, JSPL was on fire in today's trading session. The stock ended higher by more than 20%. That's on the back of news that the company bagged the Gare Palma 4, 2 and 3 coal blocks. Importantly, the bid price that they bagged this particular block at was a negative 108 rupees per ton. A few details over the block up for you on your screen. It was allocated, it was set aside only for the power producers, and also it had reserves of around 180 million tons. And the competition as well included the likes of Adani Group, it had the GMR Group, as well as the KSK Group. All of them were competing for this block. block. But why a negative 108 rupees per ton is such a positive? That's because, in fact, just take a look at the recent bids. We have a negative 400 rupees in there. We have a negative 700 rupees in there. And yesterday itself, SR Power, they backed their particular coal block for a negative 1,000 rupees plus. So that's why this one looks much better. Now, what will the coal that they mine from this particular block be used for? It'll be used for their Tamnar one. That's a 1,000 megawatt power plant. So it'll get its entire supply from these blocks. The excess, that's around 1 to around 1.5 million tons, could be used for Tamnar 2 as well. That's because the total coal that will be mined out of these blocks will be around 6.5 million tons. Remember, the clause being that only 15% can be sold via merchant sales, while the remaining, that's 85%, can be sold only via the PPA route. And the company told us that at present they have nearly around 800 to around 850 megawatts that they have signed under the PPA route, though only around 400 megawatts are currently functioning. That's the PPA they've signed with Tamil Nadu. Remember, JSPL was always going to be in an advantageous position because of their proximity to the coal block and also because of the fixed cost advantage.
Oh yes, thanks a lot for that, Nigel. And in fact, the JSPL management was clearly ecstatic when they spoke to us after retaining those two coal mines. Speaking exclusively to this channel, the group's CFO, K. Rajgopal, said they can use the coal from these blocks for their other power plants as well, and that they will sell it at the auction price. Of course, they may have to take permissions for that, but listen to the management.
Let me say we have won the bid, and this was at minus 108, so that means we have to pay the 108. Other bidders were Adani and on GMR. Currently, the capacity is 6 million tons.
Okay, well, that's the word coming in from the company. Let's tell you what the government is saying or thinking now. The bidding so far at the auctions has been quite aggressive, and this has even taken the government by surprise. Speaking exclusively with CNBC TV 18, Coal Secretary Anil Swarup assuaged worries of power companies by saying that Coal India will produce more than 500 metric tons of coal this fiscal year.
Now we are looking at more than 80 blocks before 31st of March. So that's quite a huge number before 31st of March. And I would like to assure the industry that more and more blocks will be offered even thereafter. So I don't think there is any reason for them to bid aggressively on this count. If they're bidding aggressively on some other count, I can't say that. But as far as the availability of blocks are concerned, there will be sufficient number of blocks. We are making a lot of effort to see that the Coal India production still, in itself, gets ramped up. This year we are seeing a record production. We are already ahead by more than 7% over last year, and we are hopeful that we'll cross 500 million tons this year. You know, the problem is that if there is lesser bidding, you ask a question that why is the government losing money? I raised this point earlier also. Now that the government is getting more money, everyone is again getting concerned. We are trying our best to ensure, and I'd like to repeat, we'd like to ensure that the tariffs don't go up. I have announced that in the past. If someone still wants to bid aggressively, what can you and I do?
All right, that's an assertive Coal Secretary. It wasn't just the power stocks, the defense stocks were up and about. And in that space, Baba Kalyani's Bharat Forge has signed a multi-year contract with commercial airplane maker Boeing. The company will supply titanium forgings for wing components of Boeing 737 and 737 MAX. Sonia Shenoy joins in with what she has spotted from this deal. Sonia.
Well, thanks for that. Bharat Forge moved higher today after the company got a contract from Boeing Commercial Airplanes. It signed a multi-year contract with Boeing to supply titanium forgings, and the management told CNBC TV 18 that they're targeting revenues in excess of $100 million per annum from the global aerospace supply chain sector, a sector in which they're increasing their presence. Apart from that, the Kalyani Group as a whole announced a JV with an Israeli company called Rafael Advanced Defense Systems. Now, this is a company that manufactures high-tech defense systems for air, land, sea and space, and it has a sales of around $2 billion in 2013 and a profit of $101 million. And Kalyani Systems will, in this JV, develop and manufacture high-technology systems for the defense sector. So all in all, lots of positive news flow coming in for Bharat Forge today.
All right, Sonia, thanks so much for that. In fact, our colleague Rituparna Bhuyan caught up with Baba Kalyani, chairman of the Kalyani Group, and asked him how this investment will come about and what will be its size. And Baba Kalyani actually said that it will be quite a sizable, important investment for the group.
This thing requires a lot of mechanical components, manufacturing. I think this is what we will bring in. The entire technology, electronics, radars, lasers, missiles, that is what Rafael will bring in. And I think together we will put our respective strengths and our capabilities, engineering capabilities from both sides, and create a fairly strong joint venture to go in this system for many, many years.
The fertilizer space also saw some sharp moves today after the oil ministry proposed that gas prices will be discovered by pooling imported and domestic gas prices. Ushang Seth joins us with the details.
Well, thanks for that. So all the fertilizer stocks were buzzing in trade today, with Mangalore Chemical gaining nearly 12.5%. Other stocks like National Fertilizer, Deepak Fertilizer, Chambal Fertilizers gaining anywhere between 3.5% to 4.5% on back of the news where the oil minister proposes to pool gas prices for fertilizer plant. Under this, the average out prices of domestic natural gas and imported LNG will be applicable. Remember, the imported LNG price stands somewhere around $13 to $14 per MMBTU, but with this pooling coming into the picture, along with the custom duty reduction on the imported LNG, the prices of the imported LNG are likely to go lower. As of now, if you look at the industry, it is sourcing prices at different prices. So most of the players are getting gas at price of around $10 to $12 per MMBTU. With this price pooling coming through, it is likely that this price will be further reduced, which can be a big positive for the industry as a whole.
All right, Ushang, thanks for that. Time for us to get into a quick break, but coming up on the other side, more market opinion and also some trading ideas.
Aditya Birla Group presents Budget 2015, the Make in India Budget.